Hey guys, this is Wally from SuertePanda.com. I'm here with another segment, or another one of my favorite segments from Tastytrade. This is regarding expected value. So this basically, this formula basically tells you what you can expect if you do this type of trade many times over. I'm referring to strangles in particular. And Tastytrade usually does their studies at least 10 years back. They're usually 10 to 15 years based on the number of years of data that they have on certain trading products. Most of the time they use the SPY, the ETF that's very, very popular for trading and hedging. So, and what they found is basically the expected value for trading strangles over a long period of time is that there's generally a positive expected value for trading strangles, and basically it's the winning percentage multiplied by your winning profits less your losing percentage times the losses on those strangles. And what they found is, at first it might seem negative, but they actually found out that over enough instances, especially for one standard deviation strangles, that the expected value is positive over time. And I've looked at multiple variations of this study, and they've done a really good job in presenting these, and I'll link them in the description. So that you can reference it at your own leisure. And I think it's a good idea to kind of copy this type of formula for your own trading. Generally what they found is that market makers and we can become like our market makers as well. But what we're trying to do is we're trying to sell premium to other traders and maybe other hedgers, they might be speculators. I mean, but from our point of view, it doesn't matter as long as we have some type of, you can think of the other side as kind of our customers, and we have to give ourselves some type of profit margin. And usually for the larger market maker firms like Susquehanna, Citadel Securities, usually what they're trying to do is they're trying to sell the difference between the bid and the ask. But if you look at something like the SPY, where the trades are pretty, the spreads are pretty tight. You're only making maybe like a penny for most of the heavily traded option strikes, and they can maybe widen out to like 5 cents, 10 cents, and they make a lot of money based on volume because there's so much. There's probably billions of dollars being traded every day. So overall, that adds up for them. But for us, since we're generally trade on a larger scale, maybe we're trading 100,000, maybe 1 million if we're more fortunate, we have to be more careful. We have to be more selective as to what we trade. But anyway, getting back to the expected value formula, I think it's a good idea for us to keep track of what we're trading, and we want our own trading is to try to mirror this 15 to 20% edge over the course of a year. And usually what you want to look for is we want to try to sell, put more of our emphasis on high implied volatility environments. Maybe in a low volatility environment, we could sell maybe just like one contract just to keep ourselves active. And then when volatility picks up, for example, like we have in the late October, early November election year cycle, we want to take advantage. We want to actually sell more and put more of our capital at risk to take advantage of this high implied volatility. And we generally find that, at least according to the Tastytrade research, that implied volatility is overstated, because rightfully so, when you're selling options, you're taking on I would say more risk. So we want to give ourselves like some padding, and that's why, generally speaking, implied volatility is overstated. And this was so helpful when I was deciding where more of my training should be focused. And in the past, I've traded many products, such as futures, forex. When I was trying to, just figure out like the financial markets, where the most amount of edge in the probability of my trades has improved over time because of what Tastytrade was kind enough to kind of share with everybody. And that's why I'm such a big fan. I've been a loyal follower of the Tastytrade content for, I guess, since they started, basically. I want to say 2011, 2012. And then, and if you want more of this type of content, please consider liking and subscribing, because this kind of lets me know where I should kind of focus my content on. And obviously, if you have any questions, I'll be happy to share my feedback and my experience. So please comment below as well. And and thank you so much for watching, and I hope you have a great one. Thank you. Bye now.